Hi friends, my name is Rahul Jain. I'm a SEBI registered research analyst. In this video, I'm going to talk about 5 or 6 stocks which are making headlines. These stocks have become talk of the town for the right or the wrong reason. We are going to find out in the next few minutes. But these stocks are not buy-sell recommendations, but my intent is that through these 5 headlines, we're going to try and learn a lot of investing concepts whenever you want to invest in direct stocks. Okay. If you're new to my channel, I request you to hit the subscribe button. And with that, let's get this video cracking. First headline that I want to speak about is Madhu Kela buying 2 companies, Indiabulls and Simplex Infra. And this is a very latest news, and this buying has happened very recently. In fact, I'm going to show you the details, but this is a very interesting buy. Okay, in particular Indiabulls, right? Now, before I give you insights about why this stock is very interesting purchase, let me walk you through the portfolio first. So this is Madhu Kela's portfolio, and what you note here is that he's got Indiabulls here, 70 crores, roughly 2.2% stake. Okay, one important learning here is that he's not gone and built a position of, let's say, 10% of his portfolio, 2.2%. This is a small cap company. Please remember this, that small caps have busted like anything, right? 30%, 25% at index level. And if you go to individual companies, God knows how much they are down by at the minute. I'm not saying it's a bad space to be in. This might be a good space to be in actually right now, because a lot of damage has already happened. But coming back to this particular company, if I take you back to this company's history here, what you note is that back in 2018, this company used to trade at a very high price level. Okay, you can see the history here, 650 rupees level back in 2018. And this stock has hammered down since then for almost now 8 years, and it's down by almost 98% times. How much? 98% times. And this is a very important learning. A lot of us believe that, a stock, it is down by 50%, 60%. Isse zyada kya hi hoga? Actually, that might be a misconception. Here is a live example in front of you where the stock has been beaten down by almost 98%. I don't know when you're watching this video, the price might change, and I'm not interested to show you the live price. Important point is that the stocks can crash. But interestingly, why would Madhu Kela go and buy this company all of a sudden when small caps are being hammered down? This company is down by 98% or so. Here are recent developments I found about this company. Again, I don't know why he's bought it, but here are a few things that we need to know. Point number 1, in the month of November 2025, there was a big merger between 3 companies, and in fact more subsidiaries as well. And these companies were Yari Digital Integrated Services, okay, Indiabulls Enterprise Limited, Dhani Services Limited. These companies were merged together to form one single company called Indiabulls Limited. Okay, now here if you note after the merger what happened. So let me show you. After the merger, if you go back and have a look at this company's investor profile, you will see that promoter stakes have gone up to 32%, and more importantly FI stakes have also come in. So companies like Goldman Sachs have got 1.41% stakes, right? You see the reputed FIs that have built some positions as part of the merger possibly, and the FIs that have been exiting the Indian stock market, it's not that they've completely exited. There are buyings happening, and this is one example where FIs actually have shown some interest, right? So this is one interesting point, that this company is being on the radar now for FIs as well. Now coming to what other things have been happening in this company, interestingly, one thing is that if you read their exchange information on 20th of March, they made a joint venture of around 600 crores of revenue. They're going to build some commercial real estate in Gurgaon, 2.38 acres. Okay, but I'll talk about that in a minute. Before that, have a look at their quarterly revenues. Okay, quarterly revenues, if you see post merger, they did 97 crores, December 2025. And if you see last 2 quarters, the profit has been declared 75 crores, 78 crores. The company was making losses before that, if you see continuously last few 8 to 10 quarters, but all of a sudden 75 crores, 78 crores, right? If I talk about the top line here, you will note that trailing 12 month is 425 crores. Okay, previous to that, of course, the revenues are not there for whatever reason, because there was a big merger that happened. Again, I'm not going into the history of why these revenues were not there, etc. There is a lot of details about this company that you can get into. But coming back to what is happening currently, 425 crore is trailing 12 months. I was also reading their post-merger commentary from the management, and what the management was saying is that 3,000 crores is the sales that they are likely to hit in this financial year. Okay, that is a very interesting revenue point that we need to understand. All of a sudden, they are going from 425 crore to 3,000 crores, and that too, this is a merged entity. So all 3 companies, 4 companies, however many companies have been merged, all of their total revenues will be declared very soon, hopefully in Q4 and then financial year. Okay. Now, more importantly, if you see their real estate projects. So for example, they have owned projects. So you can see here, Gurgaon based builder, they are building a lot of these, in sector 104, etc. You can see, and also they have joint ventures, right? Total, if you put together, their expected revenues is around 23,000 crores is what company is saying. This is not going to happen in 1 year. I don't know what is the time duration. They have not declared that how many years they will take to get to 23,000 crores. But that's the horizon. That's the vision that the company is talking about. They're building all these real estate projects. That's what you need to understand. In addition to that, the company is also into stock broking business. You can read all of this detail here. They haven't really declared how much of the revenues are coming from this segment. But if you remember, Indiabulls actually started back in 1999, I think, where their primary business was broking business. Okay, so that is one arm here. And thirdly, they are also going to launch in India something called a small and medium business platform. There's a company called Spring Cash LLC in USA, and this Indiabulls company owns some stake, around 16% in that, and they are coming up with a SMB platform in India. They're doing some trials, etc. in US. So this will come. I don't know how much of the big opportunity this will be, but this is again an update that you need to understand. Finally, they are also into ARC business, which is asset reconstruction business, and you can see that their total asset under collection is around 3,800 crores. So these are all the good things or the recent updates that have happened with the company. But what about the risk of the company? And this is where I don't understand what logic Madhu Kela would have used to pick this particular company. Why? Because their founder and key promoter Sameer Gehlot, okay, have been in the limelight for right or wrong reasons. If you go and Google about him, you will know there have been, cases about him. There have been FIRs. There have been a lot of allegations. Okay, I'm not saying whether he's guilty or not. That is, that is a judiciary matter, and I have no say in that, right? I am reading simply what is out there in media. Okay. Now, with this sort of a history of a promoter, I don't understand why Madhu Kela would go and pick this particular company. It's a very, very interesting pick. And if time permits at some point in time, and if Madhu Kela is happy to come on our show, I just want to talk about how he made this particular decision. Okay. Because there, of course, there risk here. There, I see a turnaround as well in terms of their business model, etc. There have been mergers. FIs have taken some interest. There is a lot going on in this company, okay, and it will be very, very interesting to watch what happens to this company in the next few months in terms of the performance of their financial results, their share price, etc. But I wanted you to be aware of this particular headline. It is quite interesting, and I would love to know what is your feedback on this. Do you think it's a good pick? Do you think it's a bad pick? Either ways, let me know in the comments what do you feel about this particular pick from Madhu Kela, while I move to the second company. The second company that I want to speak about is Palantir Technologies. Very, very interesting tweet by one and only Mr. Donald Trump. You can read it. And here he's actually mentioned the ticker of the company, the stock code PLTR. Why would a president do that? I mean, that's just very, very interesting. Is he saying that go and buy this particular company? He's talking good things about this particular company. And here is what I found about this company, more importantly, which is Cathie Wood and Michael Burry. They are locking their horns. Okay. Cathie Wood, you all know, really made big money, right? Few years back. All of a sudden, she's bought Palantir on literally last week. Okay. And on the other hand, you have Michael Burry, the guy who actually predicted the financial collapse. He is saying that keep away from Palantir. So it's a very, very interesting where two ace investors are actually locking their horns to say that one is saying I promote it, other one is saying that, it's a bad company. I don't know what your viewpoint is. Let me know in the comments. What do you think about this particular company? Here is some interesting updates for you. Okay, if you look at the valuations of Palantir, if you look at trailing 12-month PE on GAAP basis is 210. What is the PE? 210. And I'll in a minute tell you about the growth of the company as well. Okay, if you look at the forward PE of this company, it is right now trading at around 117. It's a huge PE. Why would a company demand such a premium valuation? You might ask me, right? Have a look at the growth of this particular company. EPS growth that has been declared for Palantir is around, if I show the data here, diluted growth is around 231%. If a company is growing their earnings per share at around 231%, then of course it's not going to trade at a PE of 20 or 30 or 40 for that matter. It's going to trade at something like 100, crazy PE. Okay, so valuation is very high, growth seems to be very high, but here is even more interesting fact that you need to know about this particular company, that the co-founder of Palantir, Mr. Peter Thiel, is a Trump supporter, he's a Republican, right? And they are getting government orders of around $1.2 billion last year. Okay, the company makes around $5 billion of revenue as far as I know. Last year, this is the run rate, $5 billion. And out of that, $1.2 billion came from US government. Now, can you connect the dots here? I think I can very well connect the dots here. Trump and Thiel like each other, right? and they're getting good US government orders. Of course, Trump is going to give them orders. Why would he not? Why would he not give them order, right? And apparently because of that, EPS growth is very high because of course there are good orders. They're executing those orders. They're making some money. I don't know what's happening for the US defense, right? That is a separate topic. A defense expert should talk about how much of a difference Palantir is making to US defense, not US president, because of course there is a clear, compromise here that is seen in the headline. This is like in the headline. What is happening in the background. At least I don't. Okay, so it's a very speculative company in my view. That's how I would read it personally. It's a very, very speculative company. Can you make money in a speculative company? Yeah, possible. Okay, as long as this Sandgard continues to go, yeah, you might make money in that. Can you lose money in this? Badly. That's also possible, and that's why there are two investors, Cathy Wood and Michael Burry. They are locking the horns on this particular company. I just wanted you to be aware of this. A very, very interesting headlines. Don't get carried away. Try to connect the dots as well and make your decision whether you want to be in Cathy Wood's camp or you want to be in the camp of Mr. Michael Burry. That is your choice, not my choice, but I just wanted you to be aware of that. On the contrary, here is the third company that is also from US stock market. I'll come to Indian stock market in a minute, but these are very, very interesting headlines that you can't afford to miss out. Headline I'm talking about is Google now. Okay, personal intelligence launches in the Gemini app in India. Very, very big headline. Okay, just off the press, literally yesterday this news came out. Okay, now what is this personal intelligence? They have given an example. Let's say you're building a trip for Jaipur, okay, for a vacation. Your bookings will be in Gmail, right? You might have gone to YouTube and have looked at for, let's say, local restaurant, right? That history is also saved. That's your personal intelligence, right? Now it can actually create a timeline for you that based on your YouTube search, here is a local restaurant you found and this is where it fits in your itinerary. So it's going to look at multiple apps and build you something which is based on the personal intelligence. So it's going to have access to, of course, your Gmail, etc. And I don't know the legalities of that, etc. Again, this news have literally just come up. So point is that Google is a company that is continuously innovating, and you cannot really ignore this particular company from a headline perspective. In terms of the stock valuation, etc., let me quickly give you some 1 or 2 minutes of commentary here. If you look at the revenue per share of Google, it's a consistent compounder. You can see the top line here, 19.83 back in 2016. Continuous growth you can notice here, and in December 2025, 17% growth in the top line. Again, on Google, I have done a deep dive analysis on my YouTube channel just 3 months back. Please go and listen to that video. You're going to understand exactly how Google makes money, where are the revenues coming from, etc. But if you look at earnings per share growth as well, diluted EPS, last couple of years have been fantastic. 38% growth in 2024 and 34% in 2025. And in the last quarter, around 34%. So you go and read these numbers. It's a consistent compounder, barring 1 or 2 years. For example, in 2022, it fell down for some reasons, right? Not going into a lot of details here, but Google is a consistent compounder. Look at the valuations here. The trailing 12-month P is around 29 and the forward here is looking at somewhere around 27.92. So it's not that it's trading at huge valuations of, 40p or 50p. And this is what you need to also understand, that some of the stocks in India are trading at 40, 50, 60p valuations. But are they delivering value like Google? That's what the comparison should be now, right? We're not living in a world where we are only investing in Indian stock market. We are also looking at diversification. At least I am doing that. And if you're looking for diversification, then you can start investing in US stock market using Vested platform. I'm personally using Vested for my US investments. It offers you more than 10,000 plus US stocks, ETFs, etc. So there is a plenty of choice there. And if you're not interested in individual stocks or ETFs, there are curated mutual funds, global mutual funds, including GIFT City based. So there is a plenty of choice for people who want to diversify to US stock market for whatever reasons. For me, there are a couple of reasons. One is the diversification, and second is there are a few themes that are truly not available in India, be it AI theme or be it space theme. I'm continuously exploring these themes as of now. Haven't really made huge investments as of now, but looking to explore few more details around space and AI, etc., and find some good opportunities which are at reasonable valuations. Because I'm a sort of a value investor as of now, given what is happening geopolitically, right? One day Trump says something, another day he says something else. Therefore, it is very, very important that we look at the valuations. But anyways, if you have not yet started your US investing journey, Vested is a very, very good platform. You'll find the link in the comments and in the description of this video. video. If you use my link, when you open your account with Vested and do your first funds deposit, you're going to get $10 free from Vested for my followers who are using my link. So go to the pinned comment, find the link and use this link for your benefit. With that, let's go to stock number 4, which is from Indian stock market. The fourth company that I want to quickly speak about is HDFC Bank. How can I not talk about HDFC Bank? It's been making headlines right, left, center. Atanu Chakravarti, the chairman, exited in the month of March. You would have all seen that controversial statement rather. Okay, after that, what happened? That FI started dumping HDFC. 48 crore shares, around 26% crash in the month of March. That's what it was reported in media. And around 35,000 crores of selling by FIs on HDFC Bank alone. Okay, huge selling. In fact, Nifty Bank took a nosedive because of HDFC Bank, of course, because of the higher weightage, right? Immediately in the month of April, beginning of the April, many brokerages turned bullish on HDFC Bank. You would have read in the news, JP Morgan, for example, Jefferies, they started talking about bullish commentary on HDFC Bank, right? In the middle of all of this, RBI governor said that there are no governance issues. Clear-cut statement coming out from RBI. Okay, now it's a question of who do we really believe here? Okay. On the other hand, Atanu Chakravarti has been saying something, but it's all golmol, right? He's not clearly telling what the problem is, which is really, really sad. Okay, he's resigned and not telling clearly. I watched his 45 minutes interview as well on YouTube. You can go and watch that. It's all golmol, right? I mean, it's the same thing repeating and it's not really giving any good details to understand what really has gone wrong. Okay, here is RBI saying that there is nothing wrong, right? So as an investor, I don't know what's really going on. What really is the undercurrent there? Fundamentally, if I look at the bank, okay, the last quarter results came out, decent advanced growth rate, credit growth rate, 12% year-on-year basis. If you look at the deposits, around 14.4% growth rate. So it's a very, very good operational performance by HDFC Bank. As far as I can see, there is no big problem here, right? Now, what could happen next to HDFC Bank? So a couple of things that I wanted to quickly make about here. One is, if you look at the PB ratio of HDFC Bank, okay, median in the last 5 years has been around 3. Okay, it's now trading at around 2.2. So if we ignore this saga that has happened completely, if we just look at the valuations, definitely below median. Okay, that's why many of the brokerage companies have been saying attractive valuations, right? On the other hand, if there is another bad news that hit this particular bank in the next 1 or 2 or 3 months, then there could be some more pressure for HDFC Bank. Could it be nearing the bottom? Well, most people, that's what they are cautioning against, that it is almost nearing bottom. Again, not my view here. Okay, it really depends what happens in the next few months. If any other bad news comes out, stock is likely to be remaining painful. But otherwise, in the next 2 to 3 years of time frame, people are going to forget about this particular news and, things will move on. That's where it stands. Not a buy sell recommendation for you, but I've given you few information that might help you understand the broader context of HDFC Bank. With that, let me move to my stock number 5, the last one, so that we can quickly wrap up this video. The fifth company that I want to quickly speak about is TCS, as well as the entire Indian IT sector. There are few headlines that we need to understand. Very, very recently, TCS came out with Q4 numbers. I actually wrote a detailed post on my YouTube community talking about those numbers, talking about the concept of derating, PE derating. If you're not yet a member and want to get premium insights, premium content, then you can consider joining my community as well. The feedback of this community has been good. I try to post on a regular basis and try to give you insights that are not available elsewhere, right? Now, coming back to TCS, the headlines that have been made recently is by Goldman Sachs. Okay, so there was an article published by Goldman Sachs last Friday, and in this article, Goldman Sachs' view is that there is a value emerging in the IT sector. Here, they haven't really qualified whether they're talking about Indian IT sector or they're talking about US IT sector, but their main viewpoint was that companies like Accenture, companies that are traditional software companies, that is where they see value emerging in the tech sector. Also, Goldman Sachs CEO talked about AI just very recently on the earnings call presenting the Goldman's results. And here he talked about whenever you have acceleration in new technology, which he is referring to AI, there are going to be bumps. There are going to be risks, there are going to be issues, there are going to be recalibrations. But the power of the technology to use it in enterprise to increase efficiency is incredibly constructive. Now, a lot of people are taking this particular comment in the spirit that, for example, Gurmeet Chadha, who is a financial expert in India, he's saying that, this is indicating that AI taking over enterprise software is not easy, right? There are likely to be some bumps. That's what he's saying. And therefore, they're saying that there is still value in IT sector. Everybody has their own point of view about Indian IT sector. What is my point of view? Very simple here. If I go back to the PE ratio of TCS, for example, okay, and if you look at the last 10 years PE ratio, median PE has been around what, 27.7. Currently, it is trading at around 17. So a couple of points that I would like to make, which is my own personal assessment. Number one, From a valuation perspective, is it nearing bottom? Yes, pretty much. Okay, 2%, 3%, 5%. Okay, from a valuation perspective, you cannot really rule out. That's volatility. Okay, is it nearing the bottom? Yes, it looks to me, my point of view is it's nearing bottom. What about the upside here? Now, when it comes to upside, I am not in the camp that it can go back to 40p. That is definitely not happening. That's my point of view. Can it go back to the median P of 26? I struggle to understand the reasoning behind it. Why would this company or Indian IT companies in general go back to the median P sort of valuations in the next 2 to 3 quarters? I struggle to understand. But having said that, there could be some recovery. That is never denying. Okay. But I genuinely struggle to understand why there could be huge valuation, operating. In my view, the PE for IT sector, Indian IT sector has been derated. I don't think these companies can go back to 25 to 30 sort of a PE. I could be totally wrong here again, but that's what my assessment is, right? One important point you need to understand is go and check the Accenture's PE ratio as well as TCS, and then you compare it. You'll find Accenture much more valuable than TCS as of now. Okay, given the growth that we are seeing in Accenture versus TCS and their current PE ratios, right? Very, very simple analysis that you can do. But in this video, I've tried to give you views from US stock market as well as Indian stock market. And if you like this particular analysis, request you to hit the like button. Let me know in the comments section below. Thank you. It motivates me and my team to bring such content to you at zero cost. Also, check out Vested. The link is in the comments. And give it a go if you want to diversify your portfolio to US stock market. I'm going to see you in my next video. Until then, keep rocking.